entering uncharted investment waters in this market, this bear market that we are in. The investment portfolio update for our family office here, October 2022. Brandon Gentili here. It's going to be a good one. Buckle up. Russell Brunson is one of my favorite business mentors in the world. He has taught me more about marketing, frameworks, and fundamentals than anyone I've ever studied. He has a unique way of teaching and building frameworks. One of his thousands of doodlings, his drawings here, his frameworks he has built to explain his marketing concepts. And this is something that I'm actually looking forward to do. I've been thinking about this a lot over the years, actually, and it dawned on me reading some of his work, actually, that there are certain frameworks that I live my life by, whether it's just life, and what's made me very successful and become a professional hockey player, all the way to running six-figure businesses, to just having a family office, my own investment portfolio with my family that continues to double every year. So what are we doing to set ourselves apart? And that's something I've been thinking about a lot. What are we doing? What are the frameworks we're living by that continually giving us success in many areas of life when seemingly there's a lot of life that's just stagnant and just staying there? And why is it that we are continually growing and getting better? And it's really just simple frameworks. And I truly believe that a lot of what life is predicated off of are these foundational pieces, where in the Bible, again, Jesus talks about building your life, building your house on rock instead of sand. And so much of life, so many, unfortunately, people have been taught things. It's not their fault. They've been taught things that are improper. Or they've been taught things, foundations of sand, because someone else had some preconceived notion, or they were taught wrong. And I think that's something that's very fascinating. You have to think of. You think of like the Bible, for instance. Again, 2,000 years of the Bible. Well, there's 2,000 years of interpretations of that Bible. So what you're getting is a lot of times, really, quite honestly, it could be very far from what was actually taught at that time, or what was actually going on at that time. And unfortunately, we have those works to actually do that. But then again, that had to be interpreted as well, right? Through different languages and things like that. So there's a lot of things that are lost in translation. So you have to be very careful, and that's why I think as humans have to be very open to learning, growing, and not being closed-minded, because there can be a lot to be learned that even you don't know. And things that I've studied, hockey for 20 years, or things I've studied business investing for 10 plus years, or the Bible for 20 years of my life. All these things that I think I have a really good grasp of, like I say in here at the bottom, I'm always a student. I'm never an expert. I'm never learning. And I'm just maybe a chapter ahead from some people. And there's other people that are a few chapters ahead of me, or books ahead of me. And so we're always on this kind of spectrum. And it's just continuing to further yourself down this spectrum is where I kind of see it and how I look at it. That's why we continually have to keep our minds open. And this is one of the reasons why I talk about Bitcoin so much. 4 or 5 years ago, I started buying Bitcoin, but it really wasn't until 2020. It was about 2 years ago, whatever it was, 2.5 years ago, that I really realized, oh my goodness, Bitcoin is the only thing. And began to try to unravel some of the altcoins and sell off and find good times to sell off some of the other coins I had and put everything into Bitcoin. And it was because of my mind switching from, oh my goodness, 10, 12 years ago, this system's rigged against me, it's rigged against all of us, and it's a few people winning and then the rest of us are losing. Figuring that out, going to sound money, being a gold proponent. I wouldn't say I was a gold bug. I guess I was in a way. I was a proponent for sound money and individual freedom and liberty, and every person being able to live the life they want to live, life, liberty, and pursuit of happiness, pursuit of property. And those are the basic tenets. Those are one of my frameworks. So if I had to say what are one of my frameworks, that's one of my frameworks. So if it doesn't fit in pursuit of protecting all life, protecting liberty and individual freedom and individual property, your own property being yours, then it doesn't fit my framework. Then we know it's going to have a hard time operating in this world of nature's law. And those are one of the frameworks I have used my entire life to achieve success, and what other people would deem as a lot of success. So that's why I'm going to continue working on these frameworks and building these frameworks so I can pass these along, and what I have learned and what's helped me be successful, and hopefully it can make other people successful. And one of the biggest reasons, selfishly, is I want my children to see and understand the way I think and what I do and how I allocate when it comes to investments, or how I think about things, how I think about challenges. Those are things that I want my children to do. So that's the premise of my frameworks. And what I do is, would my children be able to decipher this? Would they be able to understand it? Would they empathize with this? Would they be okay with this? And how can they be successful using that? So the traditional advice and models that salespeople and Wall Street goons have been preaching for years have been blown apart. This year has been proof of that. The 60-40 portfolio and just tossing your hard-earned time and energy, your wealth, into someone's hands who just siphon fees from you has shown to be a passable strategy when we are in a 40-year bond bull market. It's been very easy to just be the millionaire next door and just kind of stock stuff away in your 401k or just stocks and bonds and just say, oh, I'm not going to touch it. Well, that was great. And then that system really kind of came crashing down in the dot-com era, around the bust then. So you had about 20 really good years, and then it's been a little shaky since then, to say the least. Just some huge booms and busts. So again, now that U.S. debt tops $31 trillion, entitlements are going bankrupt all within the next 10 years. Inflation is through the roof. Wars and protests are breaking out around the world. It can only lead you to one conclusion, like we talked about a minute ago. Time for understanding of true frameworks of how to live one's life and invest in one's life. Most of us have been taught to operate in the derivatives world, so way away from the foundation principles and building bad foundations, and then building way up top here in second, third, 10th, 100th story when our foundation is not built properly. It's not built on rock. And this is because we don't understand primary investing. We don't understand primary investments and proper frameworks to use. And again, the primary investments would be things like timber, oil, commodities. A lot of times it would be considered that. Bitcoin, the laws of thermodynamics, if I could speak, the laws of thermodynamics, which Bitcoin is built on, and energy and nature's law, and then just timber, gold, silver, and the periodic table. If you are investing in those core assets, those foundational assets, you're going to have a hard time going wrong if you're building off the top of that strategy and that being a core basis of your investment portfolio. And again, I believe this is purposely done. You're not taught these things. No one's taught these things. No one's taught about money in school or taught about any of this stuff, because when times get tough, then you have nowhere to go, and you have to run back into the arms of the rent seekers and the fee kings and queens and the Wall Street types and the unproductive class types. The faster we can become independent and resilient, the easier it is to be free and stay free and not feel dependent on that system and keep our money, make more money, and then keep more of it, paying less taxes, paying less fees, and being the one in control of that, being your own family office. Here's the October portfolio allocation. Again, you can go back to the previous months and go check out. There's little changes here and there. I believe half of it really didn't change. We had a little bit of a change here just in our HELOC and what we're doing, just moving some cash around, which we'll explain here. Again, real estate, positive cash flowing rental real estate. And again, like I said here, I'm not an expert. I'm just a student always. This is not financial advice. This is showing what I do and what I see in the markets. So real estate, we're looking to refinance one of our remaining rental properties that we own outright from using our HELOC to pay off another one of our private money lenders. And we're looking to utilize another family or friend possibly. So we've been reaching out to people to see if anyone wants to invest and refinance and hold a note on a property, the rental property that we have, and make a bunch of cash on their cash instead of pennies. That's just if someone has cash sitting in a bank, hey, do you want to make 100 times what you're making in the bank or 1,000 times what you're making in the bank and just making a couple of pennies? Would you rather make some cash if it's just going to sit there, right? If you're just going to sit with cash in the bank and do nothing for the next year or two, next couple of years, then this might be something for you, that type of thing. I would rather hold cash short term. Again, I want to build cash because I'm an active manager. I'm actively managing my money. I would rather hold cash short term over the next 12 months and have long-term debts at low-ish rates paid off by our residents that are renting the properties. And again, we have about 35% in rental real estate. And again, remember, the dollar is debt. I've had this in here for a while. There's nothing backing it. So the further you can get into good debt, buying those appreciating assets, or at least assets that hedge, you will win long-term as governments continue devaluing the dollar, which they have to. Refinancing real estate and pulling cash out tax-free to invest in other assets, creating even more leverage, will be the people who win long-term. Savers get crushed by inflation and minuscule interest savings rates. So again, people who save, which we'll touch on here in a minute, in US dollars, get crushed long-term. Bitcoin's still hovering around $20,000. I have continued putting big chunks of our cash in beyond my weekly dollar cost averaging as it dipped below 20,000. The real power lies in the fact that when you own and custody Bitcoin in your own cold storage wallet, hardware wallet, you have become your own sovereign bank. No one can freeze you out of the system or steal or dilute your wealth. Zip, zero, nada. The world is getting crazier, and each headline coming across the newswire seemingly becomes a larger and larger billboard for Bitcoin. Bitcoin fixes so many of the monetary problems that central banks have brought on us, like inflation. Talk about frameworks. Bitcoin's frameworks and its properties, its immutable properties, its thermodynamically sound properties, nature built on nature's law, are one of the base level, bedrock foundational reasons that it is one of those investments. It's one of those things where you start operating in a Bitcoin standard and your whole life changes. Now, when you divide everything by Bitcoin and you divide everything by 21 million, which that's a great book by Knut Svanholm, Everything Divided by 21 Million, about Bitcoin, you start getting a control. You now have a controlled experiment, and everything moves in comparison to Bitcoin because Bitcoin's the rock. Bitcoin stays there. It's 21 million. There's nothing changing, right? When you're trying to measure everything against a dollar, prices of things and goods and services, all prices are information. It's information relayed to buyers and sellers. And when that's constantly moving, and interest rates are constantly moving, and the price of the dollars, continually going all over the place, well, how can you operate in a real world? This is why we have so many problems. This is why Bitcoin fixes so many of the monetary problems. And hopefully, again, I can do a better job explaining that in the future as to why I believe Bitcoin is the apex asset. It's the apex predator lying in the weeds, just waiting for each person every day to come to it and say, oh, wow, whew, I found something. I can breathe easy now. I found the thing that makes sense. Again, we have about 20% in Bitcoin. I do expect this to become a majority of our portfolio again in the next few years as it increases in value. And then again, I'm not necessarily going to sell any of it. I might lend against it. So, I can't say we're going to rebalance our portfolio necessarily, but we'll lend against that to then go and then use the fiat we lend against it with to go buy other investments, actually. So it'll kind of reweight itself in a way. Commodities: gold, silver, oil wells, uranium, copper, wheat, corn, etc. All these primary assets. Commodities, I believe, will be in a bull market, in a bull market over the next decade or two as derivatives crash and primary assets come front and center. However, this will slowly get overtaken by Bitcoin. This used to be kind of that hedge, gold and silver, stuff like that. And this will, this gold and silver will get overtaken by Bitcoin. Even you've seen some portfolio allocators have switched their 10% weightings of gold and silver. They were like that for decades. Now they've switched to 10% Bitcoin, and now to 1% gold and silver. So you're seeing some really massive changes in the world. BlackRock coming in just in the last month here. Some huge asset managers coming into the space. Fidelity's already been in. Everyone's talking about it everywhere. Europe's trying to ban Bitcoin, all that stuff. You can't. Bitcoin, you don't change Bitcoin. Bitcoin changes you. You can't. It's the decentralized code. It's information. How can you ban information? Are you going to ban the entire internet? Again, if you haven't understood the fact that governments have been trying to ban Bitcoin for 13, 14 years, they haven't yet, and they haven't figured out how to, do you think that's really going to happen? Again, I still want some analog, silver and gold though, diversified in different places around the world, in different vaults, different locations, so we can access it in emergency in case a meteor hits or something like that, some type of real black swan event. We have about 14% of our portfolio, a little more than I would like, quite honestly, in gold and silver. But I'm not going to complain about it. Paper, stocks, bonds, etc. This is the paper, derivatives world, basically. I have a couple percent in my company stock. I have stopped contributing here, actually, this past month. And credit card points that can be redeemed, stuff like that, paying off debt. Jessica's small IRA was in cash or short-term bonds, and I took it all and bought the Grayscale Bitcoin Trust, actually, because it was just sitting there doing nothing. And quite honestly, for years, I really didn't know, I didn't have access to it. So now I've actually put it in Bitcoin's Grayscale Trust, and with a limit order, and got it at super low prices. Some of the lowest prices in the last year or two, I believe, or last year and a half. It's down about 80% or something from its all-time high, or 80-90%. So got it at a decent price there. And a Grayscale Bitcoin Trust is not Bitcoin. Again, it's a paper derivative, and that it's a leverage play on Bitcoin. And I don't plan on touching it at all, and just holding it and keeping it in the IRA for, if it goes up 100x, 200x over the next 20 years, 30 years, and just having it in retirement. Great. Still not keen on things I cannot control. I don't like tertiary assets. I don't like assets that I have no control over. I have no control over the cash flow, the management, the ownership, nothing, right? So that's why I don't want it. Again, it might be good for you, might be good for whoever who wants to just kind of, just kind of do the old traditional model, but I want to be in control of what's going on. So this will be part of our phase 2 though, coming up though. Again, I've been thinking about it a little bit. I still think we're going to see another leg down or so here though in the coming months. So just, sitting on the sidelines. There will be a phase 2 time period though, when the defensive positions and the hedges, like we've talked about, Bitcoin, gold, silver, the commodities, all these things pay out. And then you lend against them or sell them potentially to buy businesses, cash flowing apartments, mobile home park storage facilities, dividend paying stocks, dividend aristocrats, or things that, as Ron Sneller was explaining to me, again, there's some really great stocks, really great value stocks, ones that pay great dividends that are close to being dividend aristocrats, or some of the metrics that also matter when you're looking at that. So there's other ways to look at it, obviously, and I kind of use that as a catch-all of the dividend aristocrats, so people kind of get my point of, hey, we want real value type of stocks. Maybe that's what I should say. We want value type of stocks that are paying great dividends going forward. Kind of the Warren Buffett type of investing of, has a consumer monopoly, things like that, and pay great dividends. Cash businesses. I still believe there will be more investments to buy in the cheap in the next 12 months or so. This could be cash or equity you have in your own business, business you own, private placements, limited or general partnerships. Cash on hand is also good in case our long-term view of inflation is wrong. Again, I've had some of these paragraphs in here for a while, but the thesis has not changed. If we're wrong for some reason and there's massive deflation, which there is a lot of deflation going on, whether it's people leaving the job markets, technology crushing job markets, we experience massive deflation, the dollar increasing in strength, which we've had a lot of recently, then we will be able to use that dry powder, the cash, to buy many more assets. I also have life insurance as well. I've noted before, I'm going to talk to Ron about rolling some of the term into whole life. I expect to have more cash in the next month here as we refinance that rental, and I'll feel very comfortable at that point going into Q4 here and Q1 of next year. We have about 29% in cash in total. And again, this 30% is a pretty heavy weight of cash, quite honestly. And that's where you see, like the Ray Dalio, some of these big billionaires. I've seen them talk recently and talk about having 20% cash or 10%, some of them 30%. So there's a pretty high weighting of cash. And I do believe that there will be some big plays going forward. But again, we want to operate daily on a day-to-day basis, though, and make sure things are running. So that's also why we're probably I probably only have 15%, maybe half that, if we didn't have businesses to run and things like that. I'd probably have a little more Bitcoin or maybe some more commodities and stuff like that. Again, I always put this in here, the updated inflation metrics. Again, this is what, they're showing 8-9% for the government metrics, but it's really 17-18%, as we can see, if you go off the 1980 base calculation of CPI core consumer price index. This is how they used to do it. They've bastardized it now to confuse people. This is really what it is. So again, that's very important to understand that. And I've got this at Shadow Stats, by the way. John Williams does a great job there. Conclusion: bond prices and equities are not supposed to go down at the same time. That's exactly what we've seen this year. All asset classes going down. Oil has come back down again to break even on the year, basically. So everything is down or break even. Gold's basically just a little bit negative. Oil's just up a couple percent. So everything's basically even or down. What an insane time. Again, demand destruction is real. Jay Powell, the Federal Reserve Chairman, told us that we would have real pain, people losing their jobs. I mean, I didn't think that's the job of the government or the Federal Reserve to destroy people's jobs or livelihoods, but hey, this is where we are. This is why I talk about Bitcoin and taking out the unproductive class and defunding them, because this is insanity. This is why I've been a big proponent of also sitting on more dry powder, more cash. As soon as we get this refinance done, have cash back in the hopper, we'll sit tight for a quarter or two. For the most part, dollar cost average still, Bitcoin, save in Bitcoin for the long term. Until we see what is happening here, it'll be harder to deploy capital until we are really heading back up from a true bottom. Trying to stay very liquid and don't want a ton of cash in the balance sheet for more than about 12 months, though, because you're paying an option premium of real inflation, like we just talked about, of about 15 to 20% a year, like we spoke about here. So, as Warren Buffett says, keep in mind when making an investment has to be beating 20 to 24% a year. Again, if you beating inflation and some taxes or whatever. So you want to be in that low to mid 20s minimum. That's why we love real estate, enforcing appreciation and refinancing. You can create infinite returns, no money in deals, stuff like that. Also is why I love saving in Bitcoin instead of US dollars. Bitcoin appreciates over time, over the last 13 years, and is up millions of percent. US dollar is down 99% or 95 to 99% over the last 113 years. So why would I save US dollars or any fiat currency that continually goes down every day, or instead of Bitcoin or hard asset or even gold and silver? Why would I do that? Again, Bitcoin has grown cumulative average growth rate, compound annual growth rate, at 100 to 150% a year over its lifetime. So that's why. Anyway, appreciate you. Stay strong. It's my, you got some tips down here, special stuff going on here. Please check out the other videos about inflation, deflation. This is just the monthly report that I put out regarding our portfolio and what we're doing, what we're seeing, how we're allocating. And I appreciate your feedback. Appreciate you sharing. Please share it with anyone you think might get a kick out of this, might learn something from it, needs it. Like and subscribe to the channel, please. And if you don't like it, please dislike it. Please give some comments, feedback. Please don't just say nasty comments in your head. Please give us some real feedback so we can actually do something about it. So we actually have a talk about it, debate. Maybe I can learn something that I'm not seeing, and how we can improve in the future and provide a better product in the future. So I appreciate your time, your energy, watching this here. It's the most important asset we have. We appreciate it so much, and we'll see you on the next one.